Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Steve Saretsky. He's a Vancouver-based realtor. You can find online at SteveSaretsky.com. Welcome back to the show, Steve.
Thanks for having me on. Appreciate it.
Steve, Lowe's will be closing 31 stores, including 27 of their Rona stores. Is this an indicator of where the housing market is headed?
I think that's probably not really fair to necessarily draw those conclusions yet. I think it probably has more to do with like a corporate restructuring than anything. But I think that, if we're looking for in terms of trying to get leading indicators on the housing market, what you want to be doing is looking at the number of building permits. That's generally going to give you an inclination of where things are going in the construction space. Obviously, at least in Vancouver, renovation spending and housing starts are starting to slow. And I think that's sort of a leading indicator, but I don't think that's necessarily tied in any way to Lowe's or any of that Ronas.
Is excessive debt now becoming a problem for some people?
I think so. I mean, obviously, we saw the latest consumer insolvency numbers come out. So they are rising, I believe, double digits or very close to it. So it's kind of interesting to see that consumer insolvencies are rising, I think for 4 or 5 consecutive months now on a year-over-year basis, when interest rates are at all-time lows and unemployment is at 40-year lows. So, unemployment, 40-year lows, interest rates at basically all-time lows, and you have consumer insolvencies, which basically tells you that, households are basically saturated with debt. And, you can certainly see that in the household debt servicing ratio, which in the third quarter of 2019 hit an all-time high, debt servicing payments, which again, I think is definitely, should be alarm bells for people that are paying attention in terms of, again, interest rates are pretty much at rock bottom lows and debt servicing payments are still at record highs.
Are increasing bankruptcies a sign we're likely in a recession?
I think it's probably much too soon to draw those conclusions. I'm probably not necessarily my area of expertise to be calling, recessions or when they're going to happen. But I think it's without question that everybody knows we are late in the business cycle. There's certainly signs that things are slowing down, and ultimately we might not know, right? I mean, at the end of the day, data continuously gets revised, and so it's funny because typically speaking, at least in the past, what history has shown us is that we often don't find out that we're in a recession until a year later when the data actually gets revised lower. And we say, I guess we were in a technical recession. So I think if you look at the data from today, right now, it certainly doesn't show that. But obviously we are slowing down.
Yeah, you're absolutely right about the time lag. I interviewed former Canadian Revenue Minister Garth Turner back in 2007, and he said, Canada's really in a recession. The only thing that's kind of buoying things up is Vancouver high tech, the Fraser Valley housing market, and Alberta oil. But he said the rest of the country is underwater. And my editor at the time refused to run the story because he said the stock market was doing great. Well, a year later, officially, we were in a recession. So, it takes time for the official numbers to come in. Steve?
Exactly. 100%. Bang on.
Steve, are rising home prices likely to be seen during a recession?
No, typically not, obviously, for obvious reasons that, recessions are a headwind for employment and obviously for bank lending as well. So typically what you see is in a recession, the labor market softens, people get laid off, And obviously, you're not going to buy a house and take on a $500,000 mortgage or $1 million mortgage, for that matter, if you don't have a job or if you're uncertain about your job prospects, right? So what drives the housing market is ultimately employment, interest rates, and confidence. So you kind of need all three. So people ask, well, how come, interest rates are low, but how come house prices aren't rising in Calgary and Edmonton? Well, it's a simple fact that the employment space over there is not very strong. It's weak. And even if it was strengthening hypothetically, is people still have to have confidence to go out and borrow money, right? I mean, you're not going to go out and take on $1 million mortgage if you're a little bit uncertain about what your job prospects look like. So those all play a key role in the demand for housing.
Ignoring politics, but realizing that federal and provincial governments affecting British Columbia are left-leaning, are left-leaning governments generally bullish or bearish for the price of real estate?
I think you could probably argue that, generally speaking, left-leaning governments aren't necessarily as beneficial for asset prices in general. Typically speaking, again, I think that really depends on a lot of the policies that are implemented, but typically it is a sort of wealth redistribution on the left side, and I think that's kind of what we're seeing, not just in Vancouver or Canada, but I think globally you're starting to get more and more rhetoric of what we've seen is a large and widening wealth gap that has created a lot of political and social unrest, and that's creating these left-leaning populist governments that are ultimately, I think we're in sort of the early stages of a wealth redistribution.
We'll have more with Steve Saretsky right after this.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlan, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the 2019 drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Welcome back. We're speaking with Steve Saretsky. Steve, a few high-end homes in Greater Vancouver have been purchased recently. Do you know if the buyers are local or foreign?
I really couldn't comment on that. I would say that as the general rule of thumb, what we're seeing in the market today is a more local-driven market. I think that a lot of the offshore investment has curtailed, not only because of foreign buyers tax and increased taxation, et cetera, but I think just sort of where we are late in the cycle, but also, tightening of credit, and of monetary stimulus in China, has played a large role, not just in Vancouver real estate, but I think in global assets, around the world.
Our friend Bob Mackin over at thebreaker.news broke a story of a business owner breaking the law in China, defrauding investors, then fleeing to Vancouver to buy $24 million worth of real estate. Is this a look into the underbelly of the real estate bubble?
I think that it certainly makes for a good headline and compelling story, and it certainly plays along with, I think, a lot of the narratives that we've heard and seen in this market over the last 4 to 5 years, with obviously more and more reports coming out around money laundering, the fentanyl, and how it all ties back to casinos overseas. And I think this, is definitely, I think a lot of things that are sort of coming out of the woodworks here. After the music has kind of stopped, you start to hear about the fraud, and that's kind of typical of manias, is that people don't really ask questions when prices are going up and everybody's feeling good. But as the music sort of stops and people are able to take their time and digest and ask themselves and ponder what really happened, what just hit us, I think that you start to find out, these stories, people start to dig deeper. And so I think that we've certainly seen some of that. And, I think it's kind of an interesting story.
Average sale prices in BC are rising according to the BC Real Estate Association. Are prices rising on low, mid-range, or high-end homes?
I would say that the high-end market is still soft. I think it's still, in my opinion, still coming down. The low end of the market is definitely recovered. I would say it's actually doing quite well. It's pretty strong right now. There's a lot of demand from local end users, first-time buyers. You say, okay, well, what can they afford? At the end of the day, there is still a shortage of affordable homes. There's a shortage in that segment. So if you look at the months of inventory, at least in Greater Vancouver, for example, homes below $1 million, there's there's 3 months of inventory for sale. If you go for homes that are priced, $3 million and up, you got 20 months of inventory for sale. So typically speaking, a balanced market is considered between 4 to 6 months of supply. So it kind of goes to show you where, what's happening in our market today. It is segmented, and basically what you have is a local market that is basically competing and actively searching for quote unquote affordable homes, and so that's why we see tight supply in homes below $1 million.
How many homes are being constructed in the Greater Vancouver area, and would they be any of them or some of them considered to be affordable?
There's just over 40,000 units under construction in Greater Vancouver, so it is a record high. I think what happened was a lot of the problem is that, not just developers here in Vancouver, but I think this is a trend globally, is that because of the, policies that were enacted post-financial crisis, is that they've created more and more wealth accruing to the top, and developers, the margins were in luxury homes. So developers focused on luxury supply, and certainly that's what we see in the city of Vancouver is there's a ton of luxury homes coming out. Any sort of high-rise condo project that's launched in downtown Vancouver now starts at a minimum price of $1,600 per square foot. So that's obviously not affordable supply, but what we do see this affordable supply is in the Fraser Valley, Surrey, Langley, Abbotsford. That's where affordable stuff is actually being built and will be absorbed by the local market.
We'll have more with Steve Saretsky right after this.
Cypress Development Corp. is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp. trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Steve Saretsky. Steve, home sales in BC have been picking up recently. Why?
I just think that I think low interest rates have certainly played a part. I think I still look at the Vancouver housing market as ultimately a function of the global financial markets, and if you look at global financial markets, you have the stock market still hitting all-time highs. You still have a lot of excess basically in financial markets, and that's primarily because money is still cheap, and the central banks have put their foot back onto the accelerator in terms of easing monetary policy. We've seen the Fed intervene in the repo markets and basically growing their balance sheet again after several years of quantitative tightening. So I think it's just symptomatic of this sort of cheap, funny money that's floating around, and there's still an abundance of it. And so I think that right now we're seeing as locals are taking advantage of that, and we've seen basically a resurgence in the housing market here.
Are we likely to see substantially more inventory in the new year?
I think that we will, typically speaking, as you start to get most of the new listings in the spring market, March, April, May. So, combined with a lot of these, you'll probably see a record number of completions this year in terms of new construction completing. So that will certainly add to the supply. I would argue that should be a headwind, but, as we've been seeing over the last 4 to 6 months is, resale new listings are historically very low. So I'm not really sure why sellers aren't selling, but they could be temporarily. But as of right now, new listings are low, and that's why inventory is not as high as it should be.
Should people, when they look at home ownership, consider it an enforced savings program for their retirement?
Yeah, I think that's what it is. I think that's what it's been designed to do. Yeah, I mean, obviously the debate is it your primary residence and investment, or is it considered shelter and forced savings? I think it's probably more that one. But obviously, I think in Vancouver, it's been ingrained in people's mindsets that 20 to 30 year bull market, that prices just automatically go up 5% every year. And I think that I think that's maybe a little bit of a dangerous way to view it. But I think if you're looking at it as a primary residence and a forced savings over the long run, I think that's the appropriate way to look at it.
Plus, once you pay off your mortgage, that's a sizable amount of money you don't have to spend anymore.
Yeah, exactly. So I think that it's certainly worked for a lot of Vancouverites, but I think that I do see a lot of millennials extrapolating recent performance, obviously, of their parents, but I think it's today's times are quite a bit different.
Tommy Chong of Cheech and Chong fame is selling his house in West Vancouver. Is the home of a celebrity likely to attract a higher price than if you or I owned it?
I don't think it really makes any difference, to be honest. I think anyone that's shopping in those price ranges is looking for discounts, and I don't think this one will be any different.
Steve, thank you so much for chatting with us.
Thanks for having me on, Jim. Appreciate it.
My guest has been Steve Saretsky. He's a Vancouver-based realtor. You can find him online at stevesaretsky.com. If you have any questions for Steve or any of our other guests, you can send them to info@housestreet.com. Find us on Twitter @HouseStreet, our YouTube channel, Talk Digital Network. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HouseStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HouseStreet.com radio is a production of House Street Media Incorporated.